Hello, Warriors. Good turnaround Tuesday to everybody. Although, looks like we had turnaround Monday. Hi, Brock, Kevin, Shahab. In my opinion, the most significant technical event of yesterday, and maybe for a while, is a key reversal in Nasdaq. Okay, so I know there's a lot of frustration in trading. I'm doing okay, Sinatra. So I just want to take you through a little bit of my narrative. I actually was selling this Sunday night, and something I've noticed, I don't know if you guys do much on Sunday night, but I'm much more of a, when I look for a lot of reversals, and they can happen on Monday, but usually not Sunday night. Don't do that. I took a look at my record for putting something on a Sunday night, and it's like to get my toe in the water to pay attention. And I've noticed I get my toes amputated doing that a lot. So I'll wait for a full session unless you're taking profits. But for initiating positions, it's probably me without admitting it, having FOMO. I was looking for a top this week in Nasdaq, and it happened. Also, yesterday I wasn't really feeling that well, and if you're not feeling well physically, you can't handle the same stress level of trading. I'm not saying you have to feel, fantastic, but you really almost have to be like an athlete and be in a peak performance state. So actually, I got squeezed out maybe 50 points or so from the top, and normally I would recommit, and I didn't. So I just want to let you guys know it doesn't only happen to you, okay? Where you're right the market, wrong the trade. And just a couple of lessons I learned. The key one, wait till Monday or Tuesday. You're not going to miss things trying to get an edge and a lead on Sunday night. That's my opinion and my experience. So I'm just passing that along to you. But I do believe this is pretty significant, what happened in NASDAQ, even more so than S&Ps. Although we had a reversal day in S&Ps, you could see that we did not take out the previous day's low and close, so it's just a reversal day compared to NASDAQ being a key reversal day. Okay, so what do you do with the key reversal day if you missed it? You look for a failing rally. So the key area when you look at the daily was when it started turning lower on the day, and that would be Friday's close, 10,854. So you're looking at the potential of a rally back into this zone, and then you're wrong over the highs. And I think it's significant more so in NASDAQ because of the charts Steve's been showing and Blake's been showing. We all know FANG's been a moonshot. So just take a look at a couple of the champions. Yes, it does, Pete. Dollar weakness is more constructive. Dollar strength, Blake's talked about it a million times. It's risk off, but here's Microsoft. Okay, so we were making new highs and not confirming on Microsoft, one of the few, but that's a pretty ugly day. See, barely above 70, and Microsoft's one of the leaders. Here's Google. Google, almost a key, and look at that divergence on the daily. You also had it, well, not on the 4 hour, so only on the daily. And Amazon, I wouldn't be long any of these looking for new highs, would you? Here's Amazon. Okay, I mean, it had an RSI reading that normally I wouldn't short this kind of momentum. And who knows, maybe it could blow up one more time. But I think it's important because and then I'll toss it over to Blake after a few. But when you look at the NASDAQ, since we bottomed on March 23rd, all the way up. All the way up. Go to daily. Look at this. You see any key reversals? Low reversal day, unchanged day. The break happened without a reversal day. Not much. Not much. So all the way up since March 23rd, you're not going to find a candle like the market put in yesterday. Everyone see that? So here's another lesson. When you're trying to fade a market, why not wait for a day like this? You know, sometimes we go intraday and we're looking for a day like this, but so people are saying, oh, I missed it. You know, like, you know, I got picked off on a stop. I'm flat. You really didn't miss it, because if this is really just the beginning, you could look for fib retracements of this whole advance. And Blake has the same level, this 97.30, which is previous all-time highs in the NAS. We could be headed there, and then go to some shorter TFs. Look at it holding the 4-hour, and look at all the space underneath the 4-hour once we take it out. So I know I've cried wolf about looking for a correction of the correction. And I think that we got our first signal. All you had to do was wait until July 13th. And that's something else. Steve and I have a little bit of a debate as far as when you could look for markets to reverse. He looks for them at the beginning of a new month. And I learned from a guy named Eric Kadick, who looks for things mid-month, kind of like you look for things midweek. So here we are mid-month, and let's see what kind of month we have. Pete talking about the dollar, still doesn't look like it's bottomed, but it's this grinding decline, and perhaps we need to have a stop hunt under here. The low of the move, 95.72. Shouldn't be that difficult to achieve. Again, this 97.10 level. Write the number down. We get back over 97.10. I don't think you want to be bearish a dollar. Okay. And let me wrap it with gold. You know, they're trying to pressure it here, but I still think there's another high based upon what? This, right? So now if we get a new high in gold, even if it's 1830, 1840, unlike up here, I don't think we're going to confirm. And maybe we'll get a real signal for when it's going to turn. There's no reversal signals here. You know, we had some good breaks. There was no reversal signal here. When you look at even the dailies, you know, before we got up here, there were no reversals all the way up. So just, you know, a gut feeling is that when we peak in gold, that we'll have something similar to what we had in Nasdaq, because, you know, it'll be new highs for the move. And we'll get some type of reversal day, which, as you can see, all the way up, just like the S&Ps, no key reversals. I mean, this was a nice break, but it wasn't a key reversal. And this still looks like it could be setting up for one more high. One more high, I'm looking to be aggressive on the short side. So those are my opinions. Those are my calls. And I want everyone to consider that what they see in face is just the tip of the iceberg. In fact, you know what, guys? What you can do, what's a great live asset for you, and I'm going to be recording a little webinar for Forex Live today. They're recording their, like we had a summit and everyone's copying us now, is that you have a great reservoir of talent in all of our recorded interviews. And you could even use it to perhaps curate your own little list on Twitter, because Twitter is where I get at least 90% of my guests over the years. This guy's a very young trader, but very good. He's very bullish a dollar so that he could get braces later. But this will be a great library and resource for you.
Is that
Huh?
Santiago Fund? The
Yeah,
Santiago Fund?
yeah, Brent. He's a great guy.
Yeah, that's
He just trading hasn't affected him. He still looks very young to me, unlike me, right, Blake?
that's funny. Yeah, obviously that's his son, but that's funny.
Oh, here's Steve's favorite right here, Henrik Zeberg. So you have everyone in here. It's a great resource. I don't know why we haven't done anything with it, but you could just go through it and you're going to pick up pearls. And my point in the webinar I'm going to be giving is the most popular, the most popular ones, the ones with the most followers, aren't always the best. That you could find diamonds in the rough. I've brought in guys that have less than 1,000 followers because a tweet caught my eye, and they turn out to be a pretty good resource for me. So there's a difference between the market and how you handle the market and marketing. Okay, so just something I wanted to point out. And the most important piece before I leave is, and hand it over to Blake, is give it a shot. We still have the reimbursement program where you could get cash back. It's still happening here with Forest Park FX. And I really think that something else I'm going to be talking about today is you can't learn experience, okay? But you can learn from the experienced. And you have plenty of it here. And I mean, here's a great example. Stelios doesn't have a lot of followers. Steve doesn't have a lot of followers, but they're, some of the best analyst traders I've met. Amanda doesn't have a ton of followers, but try and have a chat room without her. Okay, so just wanted to bring that to your attention and try and find a better team. I challenge you. Let me know who they are. And that's going to be a wrap for what I saw yesterday and what I'm thinking today. And I'm going to just turn it over to Blake now. How are you, buddy?
Good. And good morning. And by the way, I don't know, while you're on that page, why don't you scroll to the very bottom?
Oh, do we have a new addition here?
Yeah. So if you guys haven't noticed, we have a newcomer to our team. His name is Leandro. He's a welcome addition to our team. He is from Spain. And we're working on a new project with ForexAnalytix, and we brought Leandro along for the ride. Now, Leandro, just so you guys know, because you were talking about Twitter, Dale, I've been following. If you go to the people that I follow on Twitter, he's one person I've been following for almost 10 years, and he's a really, really just very knowledgeable, a very awesome individual. And he met my friend Greg Michalowski from Forex Live. He met him in person in Spain. Just a really wonderful human being. But he has joined the ForexAnalytix team.
I know why you brought him on now. You guys are so tired of hearing my out-of-tune guitar. Looks like Leandro plays flamenco guitar. So he's going to blow me out if he breaks out his guitar during his sessions, because that's the most difficult type of guitar to play.
He is quite an artist, from what I see.
Wow. Yeah. Okay. All right. No more use less leverage. That's going into the, garbage.
Perhaps you can stop playing in solo and you can play together.
Oh, Steve, I knew he'd have a solution for this. All right. All right, buddy. All right, Blake. So your Euro keeps pushing, huh?
Yeah. So the Euro keeps pushing higher. We're pushing right into the right into the 70s, as you can see here. Yesterday, I have to say that it sucked everybody in at the same prices. The 113.70, and then it slammed down by the end of the day, but by the end of the day we were still holding near the 113.50 level, so it wasn't really I mean, it was pulling back, but it wasn't like that. It wasn't that. It wasn't like it's, you've seen it like completely reversed. The euro's got a lot of reasons to be a little firmer here, and but that could obviously influence other dollar pairs with it. We could continue to see, the cable or the Aussie or the Kiwi hold a bid as long as the euro's holding up. And remember, it's all about the ECB on Thursday, and then the like European Council meetings that are happening at the end of the week. So, but yeah, the euro's right back up here, and seeing how it reacts today is going to be pretty important, because as Dale was talking, there was a pretty big reversal day in the Nasdaq yesterday, and that's going to be a very big. I mean, you might look at the markets right now and go, well, the S&P futures are up at nearly 0.5%, and Nasdaq futures are up 0.5%. So, we're just going to continue on from here. I was a pretty big reversal day, and I think you got to wait till the end of the day to pass judgment on equities today. I think you really got to see how we react at the open. Watching stocks like Tesla, I mean, that there's not whoops, I put that wrong. There's not much that could convince me otherwise that we haven't seen the bubblicious type of move here in Tesla. So I think watching it at the open might be pretty important, or for those of you that trade stocks like Tesla. Yeah. Sorry. Maybe like a rally back towards 1650 or something would be I mean, if I was trading Tesla, I'd be looking for this. I'd be looking for move back to 1675, 1650 to be a seller. That's what I'd be doing, but I don't trade individual stocks.
Normal market move there, Blake, right?
What's that?
Normal market move. Tesla managed to, within the same day, move higher in as much as GM's capitalization, and within the same day it managed to close lower as much as BMW's capitalization, and all that in a company that has never made a profit.
Yeah, I mean, it's kind of crazy. You got to imagine there's a lot of people that have a lot more money than us that are looking at this going, scratching their head saying, there's something fundamentally wrong going on right now. And it's a big warning sign. I mean, it just is. So, between, you got Tesla, you got, the S&P, that showed us a pretty big, the S&P was a pretty big deal, because we not only failed at these highs right over here from earlier in June, but we also failed in this trend line. This is a, pin bar, or, just some like reversal signals coming through the equity markets. And I know you get up right now and you probably got in front of your computer like, wow, the markets haven't done anything. You're right. They haven't done anything. So if you're a bull, you're probably sweating this morning. You're probably, and I'm just talking about risk in general, not anything in particular at the moment. But if you're like, let's just say you're long stocks after yesterday and you held on overnight, you're probably thinking this morning, wow, okay, good. I'm gonna hang on a little bit longer. It's damage control. And if we start breaking like the lows from last week, especially in the S&P, because you look at these prices like right here, you start breaking through, let's just call it 131.20. That's when it starts to really, you might get some panic. You might see a little bit of panic in the equity markets. Once we start breaking last week's lows, I think that's going to be more of a risk for the S&P. I look at the Aussie. We're still in a triangle type of situation. We're still in a triangle situation in the Aussie. The Kiwi is just, this is a big failure yesterday, up at 66 cents. But, we're not imploding yet. So, I mean, you know, if you're long the Kiwi, that's probably a good thing. Again, the Aussie, you know, failed at 77 cents, but it's holding up pretty well. I mean, I'm looking at this more as a triangle right now. And while we're a triangle, and let me just, you know, state that there are a lot of triangles out there. There are a lot of, you know, triangle consolidations in the market right now. While we're forming these triangle consolidations, that is a, you know, you're going to see a lot of, you know, whipping back and forth inside of the apex of this triangle before we, you know, set a definitive trend one direction or the other. And so right now, while the Aussie dollar is bouncing around in here, I mean, I'd be looking for a break above 70 cents or a break below 69 cents. And until we get this, you have to be a little careful. You know, you have to, you know, not get super excited, because once we start breaking, I think there's going to be plenty of, you know, ways to make money, you know, on a breakout or a breakdown, but you got to be a little careful ahead of that. And as you can see, the markets are just kind of whipping around inside of these triangles, you know, while we're in the apex trying to figure out exactly where we're going to go. One of the things that leads me to believe that there might be some dollar strength coming is, you know, you got this US dollar Canadian that's not backing off. We are outside of this channel. And in my opinion, the dollar Canadian looks like we're building that, you know, the risk of breaking to the upside here. And, you know, the same thing goes for the US dollar Mexican peso. I know it's down a little bit today, but, you know, we start breaking above, you know, that trend line, and it's going to get bullish really quick. And that's when I'm really paying attention to these, because I know that stocks are vulnerable here. Stocks are vulnerable, but they haven't really rolled over yet. Not saying that they won't, but they haven't yet. They haven't really confirmed that. So real quick, I'm just going to take a look at a couple other indices, and then, I wanted to take a look at the Dow. The Dow did not close above the 200-day moving average, and it looked like it until, you know, that late day reversal. So now, you know, the Dow's also a little bit of risk here. I mean, we keep failing at the 618 retracement. There's the 200-day moving average. Yeah, we're up a little bit this morning, but that's a gravestone doji yesterday. You know, that's a gravestone doji. So, you know, the risk is starting to build that we, you know, break through this lower trend line and through some of the support through here, you know, in the weeks ahead. But, you know, we got to start seeing some other markets move. And I think, you know, it's going to start with the FX. The FX is definitely consolidating across the board. So I'm gonna bring in Stelios and Steve. Guys, what did you think of yesterday's price action in the markets? It was pretty. I mean, let me put it this way. You know, Mondays are always really hard for me because during the weekend I sleep a little bit longer. Not that I can really sleep in, but I sleep a little bit longer. So Mondays, when I have to get up again at 3:30 or 3:15. I'm super tired. So yesterday I was like sitting at the desk, almost falling asleep because nothing was happening. I actually walked out into the living room, closed my eyes on the couch for just a few minutes, but I could hear my speakers, and then I hear the chatter of the guys in my office. I hear them kind of, you know, murmuring or chattering or chatting, if you will. And so I come back, and I come back, and it probably was only, my eyes might have been closed for like 15 minutes, just kind of like catnapping, if you will. And, the S&P dropped pretty aggressively, or, you know, this is the Dow, like late in the session, you know, we started to sell off. Here's the hourly. You can see it. And it was starting to happen. And I was like, wow, that was pretty wicked price action at the end of the day. What do you guys make of this move?
Personally, good morning, everybody.
Good morning.
Personally, I think the markets are torn. You know, you ask 100 people, half of them are going to say, look, the markets are going to go up and up and up and up, till kingdom come. And the other half are going to say, look, this is very overvalued. You have to sell it. So I think people are getting stopped out on both sides, and it's still a very indecisive market, although it's grinding higher for the last 3 months or so. I think we're getting to a point where valuations are a little bit stretched or very stretched. And it's very difficult to be long up here. Excuse me, I don't know what's wrong with my throat. It's very difficult to be long up here because of how overbought everything is, etc. And very difficult to be short because of how all the shorts have been run over the past 3 months. So
Yeah.
Did you have any frog legs on the island?
Did I have any frog legs? No, why?
Because you have a frog in your throat.
Yeah. Thank you. Nice one.
All right. I've never had them.
Steve, what do you think?
We've said plenty of times during the past few weeks that this is a market that grinds higher for many, many, many days in a row. But once it turns lower, it does it in quite an impressive manner. And this was one of the arguments that I was telling people, that it's very dangerous being long up here, because literally you can be long for 15 days and having made a decent profit in 15 days. And then in 2 trading days, you can lose all of it, just like that. So I think this is still the market we're in.
Steve, any significance to that being the first key reversal during this whole corrective rally that we had in Nasdaq?
In this environment that everything is directly or indirectly more or less manipulated due to amounts of stimulus that we've never ever even envisioned in the past, I'll be a little bit more careful. But I can tell you that under normal circumstances, the kind of candlesticks we got yesterday, for example, in the Nasdaq, which was an outside black candle and a key reversal, because as you very well said, we did hit new highs. Actually, I saw somebody on Twitter, an account that posts statistics on Twitter, showing that the only 2 times that the Nasdaq has rallied by 2% intraday to only close lower 1% or lower has happened twice. One was yesterday, and the other was at the 2000 high.
Wow, so it's rare.
It is extremely rare. It has only happened twice, and the previous time it happened, we know when it was, and it wasn't a good time.
I didn't know that. That's really impressive.
Yeah. What's the candlestick name?
Wait, are you talking about are you talking about? I'm sorry. Could you say what that statistic was again?
That the only 2 times historically that we've had the Nasdaq rally 2% intraday.
That was a tweet. That was a tweet that I tweeted out. It was Sentiment Trader.
Oh yeah, that was the account. Yes, correct.
Yeah,
yes.
It was at the highs. It's a tweet that I retweeted it yesterday. That's where it came.
Yeah,
from.
Actually, I saw. I'm
so that was the only other time that it's done that is right there. I think right there, right? Is what? No, or 2003? Yep. Was it 2003?
No, it was the 2000 high.
Yeah, 2000 high is March of 2000. Yeah, March of 2000. That's what it was. And March 3rd or something like that. And yeah, that's exactly what happened. So it's interesting. I think it's definitely something we should be watching. Hey, by the way, we have CPI data coming out. And Atai said, you snooze, you lose. Literally. But, the thing is, I had some Aussie yen short, so I did fine, but still. It was like, yeah, I know. I missed out on some movement there. Okay, so inflation data should be out here in 1 second. Here's the. I'm gonna just put this right. Oh, dang it! No. There we go. Sorry. Here's the inflation data right here.
Interesting. I read yesterday over the first couple of hours of the session yesterday, there were apparently 40,000 new Robinhood accounts, which went long
that bought Tesla.
It's incredible, incredible. Yeah.
Yeah, it's amazing. I mean, something. There were a lot of people.
Hold on. Okay, they're coming out now. The
There you go. You
green,
can see the data coming through.
0.1 better.
A little bit better than
0.1
expected.
better, yeah.
Yeah, it's not really moving the market here. Anyway, okay. Well, hey guys, I'm going to pass it over to you. I just want to
Thank you, Blake.
say, you guys have a great one. Good luck today. Stelio, Steve, I'm going to pass it over to you guys. And Dale, we'll talk to you soon. All right. Thank you.
Okay.
Thank
Good
you,
luck today,
Blake.
Thank you.
Thanks, guys.
Bye
You
bye,
too.
mate.
So,
Good luck.
yesterday's price action, very interesting indeed. And, we've been discussing equities for weeks now. What's going to be the trigger? I don't know, but I think there will be a
It's not
trigger.
that we have an alternative, Stelio. Equities, since, we got that down leg from coronavirus, equities have been moving everything. So, it's not that we have
Yeah.
much of an alternative.
Yeah.
Guys, what could have been, and who the heck really knows what the catalyst was for the sell-off, but California is shutting, a lot of different states are
Yes.
shutting down businesses again, that they reopen restaurants and so forth. I mean, it's not a stay-at-home order, although there are many mayors like in Phoenix and Atlanta and, some of these cities that really have hardly any capacity left for hospitalization, ICU patients, that would like to have an enforceable order for people to stay home. But I saw this one mayor, and they took that power away from mayors, and only the governors now can have the authority for that. So you have mayors begging for, let's shut it down again. And most of these governors are Republican governors that they're not going to close it down. So that's happening. And I think it was pretty close to when California announced they were, retrenching, that the market started to weaken. Just a guess.
No, I agree with
maybe.
you. I do think that was the catalyst because, it's just people woke up.
California is the sixth biggest economy in the world.
Yeah, and it's just people. I mean, given that opportunity, they figured out. Anyhow, they decided to pay attention to what we've been saying for a long period of time. That no matter what, no matter that there is not going to be a lockdown again, which I think they want, as long as coronavirus is, running freely among, especially, the US population there, that's going to influence economic activity. End of story. So one way or another, it is going to influence economic activity. And I can't really even believe it that the markets are, discounting that as something not really worth paying attention to and pricing in, because it should be priced in. And yeah, we've already seen that they have absolutely no problem printing trillions and trillions and trillions of dollars to substitute, in essence, what the economy would make from consumption, etc. But you can't really believe that there is no cost to that money. Because if that's the case, then we should abolish taxes altogether. We should abolish any kind of expense, because why not? We can print for it. But obviously that's not the case, because as I said, if that was the case, the first thing we would begin by substituting to printing money would be taxes.
Yeah, that's true. That's very true. So yeah, like Dale said very correctly, California is shutting down, and this is not a local phenomenon; it's a global phenomenon. I know quite a few countries are doing the same. So, it's still we're still not out of the woods, not by a long shot. I was reading one of the Greek ministers here saying, "Look, we have to learn to live with the coronavirus. We can't shut down the economy again. We can't afford to." And I think this is something that a lot of countries are going to adopt. So even though you don't shut down the economy, you're going to have people who change their behavior. So the net effect may not be exactly the same, but it's going to be close. So I'm still observing the markets and see how they go. Obviously, equity markets are still relatively strong, but yesterday's sign was that there is weakness, and you know how things can turn. Remember, in March it was like 4 or 5 sessions which were just destructive completely. So
Yeah.
I'm not long, I'm not short. You know, it's very difficult to.
Massive reversal in the Nasdaq, and coincidentally, we were talking about Ziggy's request. We were talking about the FANG index yesterday. Just look at this bearish engulfing on the FANG index, exactly on top of this ascending channel trend line resistance. And we do know that the FANGs have been the ones that have propelled the Nasdaq, to all-time highs, and in essence going vertical, right? Because I mean, it has literally gone vertical since finding a low. So, I would be a lot less skeptical if we were not talking about a market that is one way or another. Let's not use the word manipulated, but we can definitely use the terminology strongly influenced. So if we were not talking about a market that's strongly influenced by, in essence, the Federal Reserve and, indirectly by the government, I would, from a technical perspective, after such a daily candlestick, I would be extremely bearish. It's not that I'm not bearish in the short term following this candlestick, but as you understand, I'm a lot more skeptical given the fact that, we know that, it's not a fundamental, the fundamentals are not going to help you to move lower necessarily, because, if fundamentals were in play, we would have never pushed to all-time highs. So having said that, another thing I'm paying attention to is, and we said that, days in advance, is the VIX, because the VIX was clearly diverging, and we said so. We said that as long as VIX trades above 24, 25, that zone, it's in danger of exploding higher once again, even if that proves to be short-lived. And we have now seen the VIX produce quite a massive update yesterday and close above this descending triangle. So I think there is a very good likelihood that we're going to see another extension towards this 44 to 47 area. And if that's the case, even if it's short-lived, we might see quite a sharp move lower. Might just last like 2, 3, 4 days, but it can easily be very sharp. So, if for some reason you were long, kudos, you had an excellent run. I was long S&P from like 24.20 to 28.55. To be honest, I never imagined, it's going to push all the way up to 32 something once again. I'm still short. And I'm still out of the money in this short. I do like the candlesticks we saw yesterday, but admittedly, one single day does not constitute a proven reversal, right? So, if you were long, at the very least, though, after yesterday's price action, I think you should at least book some profits, at the very least.
Yeah, I agree.
Yeah.
Remember, we have today. We have, actually, they might have started already reporting. Before the bell, we have JP Morgan, Citigroup, and Wells Fargo who are reporting earnings. And the next week or two are going to be, we've got some pretty big names reporting, so definitely worth watching.
I'm very curious. I mean, I think it's almost impossible to predict market movement based on earnings reports, Dale. And the reason I'm saying that is because we know that earnings expectations have, taken a huge dive lower. And it's the first time probably in history that we've seen such a huge disconnect between earnings expectation and the price of the stock markets. So, who knows? I mean, we know we're going to get bad data. Yeah.
Worse earnings, we're probably not going to move the markets that much. Better earnings.
I agree with you. I agree with you. That's more or less my point. I think it's very hard to predict, but if I had to guess, I mean, knowing that the market is already like discounting the worst possibility, if we get as bad data as we expect, I don't find it easy for the market to sell off as long as the Fed doesn't change the tune it's playing. But on the other hand, if we get better data, you're going to see all the perma bulls like being optimistic, like, oh, you see, it wasn't like that horrible. It was just horrible.
Yeah.
And we might even see some of the stocks go bid again, which makes no sense, but it is what it is, and this is a game you have to play.
Yeah. One more thing I want to mention. We had some news today out of the UK. The digital secretary, Oliver Dowden, spoke in the House of Commons, and basically he said that they're going to be ban new Huawei 5G equipment by the end of the year, and also any existing equipment is going to be removed from their networks by 2027. Basically, they said they cannot trust the Chinese technology, and this is something that the Americans have said. Sorry?
Here's the article, Stelio.
Okay, so basically, yeah, the Americans have been on the same, saying the same things, and this is not going to please the Chinese, and you don't want to make enemies with the Chinese for sure. So there might be some kind of retaliation. The pound is on the back foot today again, but this is this is pretty big. They say they're not going to use Huawei equipment. Do I blame them? I don't know. It's a very tough call, but this is what was announced today, and that's one of the reasons why the pound is weakening today.
But other than that, the U.S.-China trade deal is, is going to move forward just, perfectly. I mean, we're going to have a phase 2, phase 3.
Phase 1, basically the promise of something to be done in the future may not be happening after all.
Yeah. I mean, there was no question about it. I mean, it was a joke. And, we were saying that back on that time, that, the fact that the market rallies on that is a joke and just shows that the market is just bullish, because we know. I mean, you can't doubt what you know and what is obvious. When the market and the market participants are bullish, they will buy stocks even at a hint of any ridiculous bullish rumor, right? Yeah. So it was more than clear that the US-China trade deal is a joke, because they even had to dissect it again and again to get something signed, just to say that we signed a piece of paper. Yeah. And it became more than obvious from the very first months, from the first couple of months pre-coronavirus lockdown, it became more than obvious that the Chinese are not even going to go through with the deal, because the pace of purchasing goods based on the targets was like, like nothing, a tenth of that or whatever. Yeah. Yeah. So, it was a charade, and I think it's now more clear than ever that, this thing is dead. I mean, it was never a thing, but, even if it was something, it's dead. But the market is now focused on other stuff, and, now what moves the market is the $3 trillion of Fed-induced liquidity, and the promise that if needed, they can throw even more $1 trillion in the market. So who cares about the China trade deal?
Yeah. One last thing to mention, UK data, we had some GDP did rebound from that big drop in the last reading, but a very small rebound and smaller than expected. Industrial production, manufacturing production, also a little bit better. Actually, no, a little bit better than expected, but really the data overall were not great. So another reason why the pound is dropping slightly. And nothing else today. Tomorrow we have we have UK CPI. We have a few other things, Canada CPI. So a couple of interesting prints tomorrow.
Speaking, Stelio, of the pound, I actually had to redraw my Euro-Pound chart because we found a low here which seems quite significant, especially given yesterday's candlestick in the Euro-Pound was massive, right? And with that, we actually formed this massive morning star formation. So I had to redraw a little bit the channel, because initially I thought that we broke through the channel. And it seems like, there is an actually better fitting channel here, which we did hold. So I have to say, Stelio, that based on, the price action that we had during the past couple of days, Euro-Pound still looks bullish. So I wouldn't be surprised if we have another push higher towards 93 cents or so. So if I remember well, that was the level you were looking to sell.
Yes, that's correct. Yes.
So I think you might actually get the opportunity to do so.
I am waiting patiently.
Yeah, I think you might actually get the opportunity to do so. Initially, started thinking that you might not, that you might have missed the opportunity because that 92% rejection from the confluence of the 61.8% fib and the ascending channel trendline resistance seem to probably be the end of this rebound, but it now looks like it might not be the end of that rebound. So let's see what happens there. Having said that, the pound has turned lower, as you mentioned, but the big picture from a technical analysis perspective hasn't really changed. I mean, the pound remains in a long-term descending channel. On the other hand, it has found a low there, and since that low, what I see here is like a prolonged period of consolidation, right? So, the pound hasn't really done anything during the past several months. So I have to say that, taking sides here is not an easy thing to do. Admittedly, though, we did get rejected once again from almost having reached the confluence of the 200 daily moving average and the 78.6. So, that was a decent rejection, but, would I be turning really bearish here? I mean, thinking that we might get like new lows. No, I don't think so. I don't think so. And as I've said many times in the past, you shouldn't expect the euro and the pound to massively diverge for a long period of time. And given the fact that I'm not really bearish the euro either, as you know, I mean, I've actually never been bearish the euro since 2018, because we kept moving lower, but the way we've done that is definitely not an impulsive manner. I mean, it looks to me like the euro USD might be building like a bigger base. And I'm monitoring this descending channel, and we're not that far away from breaking through it anymore. And I'll have no real way in arguing for euro weakness once we're through this channel, right? Not that I'm looking to argue for it. I mean, I had switched. I mean, I'm a European, right? And I had switched my main trading account to dollars when euro USD was at 134.50, if I remember right. So in essence, I took a passive short position in the euro when it was at 134.50. I have to tell you that I'm very, very seriously thinking for quite some time now to switching my account back to euros. And I think I'll probably do it, sooner rather than later, to in essence take a, passive position being along the euro against the dollar for a long period of time once again. I think I'm going to be doing that. So,
Steve, did you hear our guest yesterday?
Unfortunately, I couldn't. I heard him the first like 3-4 minutes, but then I was called to join a meeting. Okay. So I didn't.
Anyway, he was, based on what he sees happening in August and all these parliamentary votes and etc. He's looking for Italy to be ground zero for the financial crisis in Europe. Thinks it'll be an Italian bank that sets it off, and basically more bearish euro. But people have been telling that story for a long time. The possible dissolution of the monetary union, and that what did Italy use?
I think we're not there yet. Italy is in a very dire position. If you remember, I've warned multiple times about the dangers of Italy, and in my opinion, the biggest dangers from Italy are political dangers.
Right. That's what he thinks too. So
yeah, no, I agree with that, but okay, I don't think we're there yet.
Okay. Well, he didn't say. He was saying the fall. The
plus
there are important votes in August.
Yeah. Plus, since we know that currency pairs, you trade one against the other, right? So let's be fair and honest. Is the economic situation in the US better than it is in the Eurozone? Sorry, but if you look deep and you look fundamentally, I have to say no, it isn't.
Yeah,
very
the argument was, you know,
I
the
very
euro.
strongly believe that the strong European countries, which anyhow, constitute like the basis of the construct, are at a much better economic condition than the US. Now, if we want to talk political, I mean, does the political situation or societal situation in the US seem good to you? Because, as an outsider, I'm really worried by what I'm seeing.
His point being, a viewer asked the question what he thought about the UK, and I brought it up to him. I said, since Brexit, and they were never part of the monetary union, he actually thinks that the UK could be a bit of a haven compared to Europe.
I agree. I totally agree with that. I think that the UK might actually get to benefit from, whatever troubles the EU will have inevitably at some point in the future. Because I'm not arguing that there won't be issues. I think there will be issues, and I think there will come a time in the Eurozone that big decisions will have to be made, and those decisions will either lead to a dissolution or to a stronger convergence, and making the whole union, more like a federal type of state. So one of the two will have to happen inevitably. Now I no reason in betting which of the two is going to happen. I mean, there's a lot to be argued, but in any case, for the time being, I'm looking at the Euro USD, and I think it wants to move higher. And I think that once it breaks through that channel, technically speaking, that's going to be a major development. Now, somebody wrote here, don't fight the Fed, and I agree with you, don't fight the Fed. That's why the path of least resistance is going to be higher for stocks in the longer term, because the only thing the Fed is going to manage from its targets is getting more inflation. So that's the only thing they're going to actually manage to achieve. And I also want to remind you that part of not fighting the Fed means don't try to fade what monetary metals are doing. Because if you really believe that we shouldn't be fighting the Fed, which I agree with you, I think that it's hard to fight the Fed. And when you do it, you should have like specific targets. You should, be more of a sniper. But, what the Fed and the rest of the central banks are doing at the moment is creating an ideal environment for monetary metals to thrive. That's why gold has been doing, so well. That's why silver is doing so well. I mean, once it went to like 11.20, 11.30, whatever it was, it just exploded higher. I mean, we've gone from like 11 and change to 19 and change in a period of 4 months, which is like a huge percentage move, right? And just look at the area we're currently testing, right? Just look at this massive descending trend line resistance. So, this is more or less the moment of truth for silver. I mean, you want to be bearish to silver, there is no better area than this one. But, we break through that trend line, be short at your own peril, because I think we might have a massive squeeze. And those that believe that this is already an overdone move, you might just find out, how much of a squeeze monetary metals can produce when they're in a prolonged bull market. So that's one more time that I have to warn you about that. Now, having to do with crude, crude still consolidating here. The weekend news about reducing production cuts haven't really hurt it that much. And to be fair, unexpectedly, even yesterday's sell-off wasn't that hurtful to crude. I mean, yeah, we did have a down day, but nothing really massive. So it's holding up quite nice, which tells me that there is a chance that we will get one last squeeze out of this consolidation before we move lower. Now, is it impossible to get a move lower straight from here? No, it isn't. That's why I've warned a long time ago, and I've said, listen, this isn't anymore the place to be long crude. It might move a little bit higher, but from a risk reward perspective, the upside has stopped being appealing for quite some time. So I want to participate in the upside, but I want to do it from a much better level. For example, $29. That's where I'm still focusing. Okay. So that more or less covers, these commodities that we cover on a daily basis. Heads up, Nasdaq testing 575 lows. Yeah, indices. Keep in mind, just look at this, guys. Indices pre-webinar and even the first half hour of the webinar, they were positive, and look how they've already turned negative once again. Listen, to be very fair, it is very hard not to get some type of a follow through to the type of day we got yesterday. The simple reason, and you can understand why, is because after such a massive move higher, there are people that have profits, right? So when they see like a massive reversal like this, the first thing they want to do is like, okay, this is the place I should protect some of my profits. I mean, I'm seeing here a potential for a reversal. I had a great run. I think I should stay out of this market for a short period of time, let it pull back. I mean, even if you're super bullish, I mean, you still believe in pullbacks, right? So even the super bulls, they're like, okay, time to protect some of my profits. Let the market just pull back a little bit, work out the extremely overbought conditions, and I can jump back in a matter of a few days, worst case scenario, a couple of weeks. I mean, even if you're super bullish, you still believe that you can have a few days of a correction, right? So, after a day like yesterday, you're going to see some follow through. Now, is that follow through going to be several days? Is it going to be a few weeks? Is it going to be half a day just because they jump in? It's not easy to say, but, logic says that it's going to be at least a few days. Now, having to do with next downside targets in the Nasdaq, first of all, it's this like, 10,100, 10,200 area. But keep in mind that just in theory, just by looking at this little final ascending wedge, theory suggests that we should fully retrace this wedge, which means at least a revisit of the 9,750 area, which, it can happen really easily. And even if it happens, so what? I mean, we're still going to be positive on the year. It's still going to be, just, a textbook correction to a massive move higher, despite, all the real shit, excuse my language, that's been happening out there that would, excuse, a horrible year for stocks. So, a revisit of 9,750, which, by the way, was also the February high before we had that move lower. So even from that perspective, it's an attractive level, right? Even a revisit of that high is easily doable, in my opinion. And I do think it can, very easily happen. Now, having to do with the S&P, the S&P incrementally produced a higher high yesterday. By higher high, I mean higher high from the June high before reversing lower. Next downside area of support is at 3,115, and below that we have the 3,000 area. So these are the next downside supports from the S&P. Of course, you can't expect the Nasdaq to like seriously pull back lower with the S&P just, ignoring it. Obviously, I mean, they're going to move in tandem. In this move lower, who knows? Perhaps the Nasdaq can lose a little bit more ground than the S&P. It was overperforming for a decent period of time, so it might underperform for like a small period of time. But in general, they're going to be moving in the same direction, so don't expect anything different. What I find more surprising is, and I have to say that, is how the dollar has behaved given the pullback that we've had in risk assets. Because yesterday, despite a big reversal in equities, the dollar index actually closed lower in the day. Not a lot lower, but it did close lower in the day. And so far today, it doesn't seem to be doing much. So obviously, a couple of days, are not enough of a proof that, a correlation is changing. But I have to tell you that if we see a persistence in changing this correlation that equities down means dollar getting bid, I think that's going to be very bad news for dollar bulls, because if the dollar stops responding positively to at least risk of flows, I think the dollar is going to be toast. So, that will make me think that perhaps we've already seen the high in the dollar. I've already noted a few weeks ago that I find it a little bit peculiar that despite that big risk of move, we never managed to surpass the 2017 high in the DXY. And, as I said now, if we do see the dollar strength decoupling from risk off, I think that's probably going to be the nail in the coffin of the dollar. And, adding to that, if we see the Euro USD breaking through that channel that I showed you, I mean, I will have no real argument to make in buying the dollar. And, that says a lot. I'm anyhow very bearish the dollar in the long term. But if I see all that, I'll start believing that the long term has now arrived. You know what I mean? So we might have already seen the very beginning of the next down leg in the dollar index, because anybody that goes in a long-term chart, that the dollar has been in a massive long-term downtrend, so which is constituted mostly by periods of either sharply moving lower or more or less consolidating / recovering prior losses. And I think we're going to have another massive leg lower again. I think we're soon to find out if that's going to happen imminently or a little bit later on. Anyhow, let's see. It's important to see a continuation today in stocks being lower, and if by the end of the day we do close negative and stocks look bad and the dollar is still not going bid, I'll have to reassess quite a few things, and we can talk about currency pairs again tomorrow. I still have some short exposure in the dollar. I'm still short USD NOK.
One of our attendees agree with you. I don't know if that makes you nervous.
Not necessarily, because, and I'm not saying that, as a good thing for us. I mean, I'm not saying it to make us feel better, but I don't know if you agree, Dale. I do think that the average listener of FACE is, has a much better understanding of the average participant in the markets on the retail side.
They're smarter than the average bear.
I think so.
That's the Yogi Bear.
Anyhow, do we have a guest?
For a picnic basket, huh?
Do we have a guest today?
You were the guest.
Oh.
Thank you very much, Steve, for joining us today. Hey, boo-boo. It doesn't look like it looks like a no-show, bro. Oh, that even rhymed too. No-show, bro.
Okay, so then I can cover a couple more questions thank you for reminding me. We were talking about risk off. Listen, two things I want to talk about. First of all, Euroswiss. Euroswiss has broken out from this descending channel. Quite
hold
impressive.
On, Steve. Maine is here.
Okay, quite impressive. Just let me finish this since I started. Okay. Quite impressive, given the fact that usually Euroswiss, will much easier respond to the upside when we have, risk on conditions. So, I'm monitoring this, but keep an eye on Euro-Aussie and Euro-Kiwi, because Euro-Aussie is just breaking through this descending channel, and we do know that Euro-Aussie is very nicely inversely correlated to risk, and Euro-Kiwi is about to make the same type of move through this channel. So, pay attention here. I've said that in the past. Euros and Euro Kiwi can produce massive short squeezes when risk goes off. So, you want to participate in a stock sell-off and you want to do it through FX, this is where you should be. Okay. Thanks, Dale.
Bye, buddy.
Oh, Dale.
Yeah.
After you're done with the interview, let's go for that meeting we were talking about earlier. Okay.
Oh, I'm going to be doing something for Forex Live after this.
Okay. Ping me when you're done.
Okay.
Okay.
All right, Maine.
Bye-bye, everyone. Enjoy the interview.
Thank you, Steve. I'm promoting you to panelist now. And asking you to unmute. Welcome back, buddy.
Hey, how are ya?
Been a while.
Been a while.
Pre-COVID since you and I talked, so.
I know. Funnily enough, it was around this time last year, I believe, when we spoke last. It's right around my birthday because I'm up in my hometown in the interior of British Columbia visiting my folks.
Oh, nice. Okay, buddy. So do you know how to use Zoom to share your screen?
Yes, I do. I'll share my screen here. Give me half a second.
Okay.
All right.
There
Can everyone see my trading view screen there?
Yeah, so you're zeroed in on the reversal we had yesterday in stock indexes.
Yeah, so I'll start with Bitcoin because that seems to be one of the things I'm known for, even though Bitcoin has not been very fun to trade for the last handful of months. So anyone watching who follows me probably has noticed I've not been posting a ton about Bitcoin lately. And I mean, if you look at the price action, I think, the reasoning is quite obvious. We're not really going anywhere. One of the things that I think is an issue with, kind of the crypto Twitter community is people get really zeroed in on Bitcoin as being like the asset they have to trade, or an altcoin or whatever it is. And sometimes Bitcoin suffers from very, very, very low volatility. If you look at kind of like the average daily range on Bitcoin for, the last month, it's minuscule. So what I always try and preach to people is your skills are transferable. So if you kind of cut your teeth learning how to, mark up charts and trade Bitcoin, you can take those tools and you can apply them to other markets. And there's so many other markets that have been trading so cleanly and with so much volatility. I mean, specifically the S&P is what I've been focusing on of late. So I definitely would suggest, kind of take off the blinders, open up your horizons a bit. If Bitcoin's not in a bull market or a bear market, there's a bull market or a bear market going on somewhere in some other asset class. So real
Sound
quick
like
on
Jim
Bitcoin,
Cramer. There's always
yeah,
a bull market somewhere.
Exactly, right? So
Okay.
That's what most people don't realize, right? We're just comparing two assets here. In this case, it's Bitcoin versus the dollar. And right now it's relatively flat. So, I mean, if you just kind of look on the whole, we had that, massive move up to 14,000, what everyone assumed was the bottom. And then obviously we had this coronavirus, you want to call it a black swan event. I don't know what you want to call it, but this was obviously just very closely mirroring the stock market. And since, this March low, Bitcoin and the S&P have been moving relatively in lockstep. In terms of their correlation. I've always been a proponent of the correlation between Bitcoin and the S&P. A lot of people are like, oh, they're not correlated at all. Bitcoin is its own beast. But to me, if you look at the charts kind of on the high time frame, Bitcoin to me is absolutely a risk asset. There's no doubt about it. It moves with other risk assets. I mean, it's only existed during a bull market in the S&P, and most of the major ups and downs we've seen in the stock equities market have been pretty closely tied to Bitcoin, including kind of the blow off the top on risk assets in 2017, being the top in Bitcoin here, the pullback, then the next little run up. This was kind of your last high, and then obviously we saw the coronavirus, and then since then the correlation's been kind of extremely tight. So I think watching Bitcoin and not watching other risk assets Specifically, I like to use kind of the S&P as my proxy. In tandem, I think you're kind of doing yourself a disservice there because there's a lot of information available there. If you go and look just at the charts, Bitcoin actually started its crash like a day before the S&P, and then since then they've been very closely correlated, maybe one leading the other by a couple hours, a couple days. So to me, until we get a confirmed bottom or confirmed top on S&P, I'm not going to try and determine if this range is really going to break to the outside or downside. But for now, I'm leaning slightly bearish on Bitcoin. To me, the levels are very clear. I think 10,100, just to round it off, which is essentially the top of the range here, and 8,700, just to round it off again, which is essentially the bottom of the range here. Those are my two key levels. So if you're sitting in Bitcoin, or if you're saying, okay, when do I buy back? At what point am I confirmed we're going up? At what point I confirmed we're going down? I mean, if you're day trading this thing, that's a different story. I'd say maybe get your eyes checked, because I don't know what you're day trading here unless you're on the, minuscule time frame.
And couldn't you really say the same thing about a lot of other asset classes that we really we do have binary markets where the only difference is magnitude. You could have put up a silver chart with the S&P, and it was the same thing. You could have put up a crude chart, and it was pretty much the same thing. So risk on is being long anything, and risk off is don't be long anything. And Isn't that what's happening here, in your view?
Yeah, you could argue that Bitcoin is, a risk asset with higher beta, right? So like you said, in terms of magnitude, more volatile. So when the S&P crashes, Bitcoin crashes harder. When the S&P or the equities risk assets pump, Bitcoin pumps harder. That would be kind of the easiest way for me to describe what Bitcoin does. I don't think Bitcoin has a use case as a currency. So I think that's why people think it's like, oh, it's got this deflationary aspect. It's like that only matters if it is actually being used for currency. To me, Bitcoin is much more like a gold or a silver, a store of value. So for me, the levels are clear here. If you're like, what to do on Bitcoin, I think you wait till you see one of these two kind of areas interacted with and then breached. If we break to the downside of 8,700, I think we're going to a minimum of 7,800. So that's, nearly 1,000-point move. I think we'll retest, this consolidation in here. Is the low in? I would like to think so. I think a lot of money changed hands here, but if the floor falls out on equities again, anything is obviously possible. But I think if we lose 8,700, I think you can get into a short trade pretty comfortably down to a minimum of 7,800. But really my area of interest on Bitcoin is kind of this little consolidation here before this last large move up. This seems to be an area that's untested to me. So that's kind of about 68 to 7,200. On the upside, above 10,100, I think we're going to run all of these highs here. So this high never actually ran above here, And I think as Bitcoin generally does, it usually goes a little higher than you ever expect. So I do think if we can get above 10,100, even just above 10,000 again, I don't see us coming up there again and not breaking through. I'm expecting about 11,500. That being said, that's very much in line with and dependent on, what I think is going to happen in the S&P. This has just been a crazy market to trade of late. There's been, some serious volatility, some huge moves. I mean, I don't think I know anyone who, kind of predicted this V bottom. Or did you talk to anyone who, in March was saying this thing's going to march straight back up to, 3,000 2 months from now?
Yeah, me. It's on tape. But I didn't ride it there. It was a falling wedge, and the breakout was about 2,400. But but I started turning negative around 29. So yeah, there were reasons to buy it down there.
So I got long as well on the way up, but I didn't think we were going this high. I was kind of looking at a fractal, if you will, of, kind of the 1987 recovery.
Okay.
Because that was kind of like the closest. I know a lot of people wanted to compare this to
29.
they want to compare it to the Great Depression. And I mean, maybe fair enough. But to me, this kind of seemed more like, here, 1987, where we had the huge fall off the cliff, and then literally just the entire thing reversed. And maybe that's what we're in store for now. It's really hard to, kind of, guess what's going to happen with what's going on.
It took much longer, though, didn't it?
It took much longer, and it was more of a sustainable trend, if that even makes sense. It kind of marched up a little bit more. This has been almost vertical. I mean, if you're looking this on the weekly, you don't see a lot of black or red candles here, and the white candles, the green candles, are really wide-bodied. So to me, we have a couple key levels that I'm watching for on the weekly. I mean, obviously, this kind of area is of interest to me. This is your last kind of down move before the final high. So this is kind of where I got that, 32, 31 level. I'd put this up on my Twitter last week. I said, this is going to be an important level. And that's exactly where we reversed from, was just the lows of that consolidation there. So to me, I think if the bears are legit, this needs to push down the rest of the week, and I want this to be obviously the high of the week. I have a nice level here, about 30.70 of interest, but to me, I think if we get all the way down here, I actually don't expect this level to hold. I expect it to give us a little bit of a bump. This is more of a level of interest to me. The reason I like this kind of 27.37 level a little more is I like levels that have taken out a previous low when they got formed. So if you see this level here, the top of it, we took out this low, and then we created this kind of down candle, and then the move up came. So to me, this is going to be strong support here. And I think it's reasonable to expect that we get a solid bounce here. But in terms of kind of like macro direction, since March, I've given up trying to, call the top or the bottom, on the move. I don't know if the market is topped yet. I don't know if it's bottom yet for sure. I think the best thing you could do right now is, as a trader, is embrace the volatility that we have. Be excited that the markets are moving, giving you some of these, really long, kind of ranging environments that are really easy to trade, or giving you really kind of clear directional bias on some of these currency pairs, and just enjoy that. Don't get caught up in trying to be the hero on Twitter who's calling a top, calling a bottom. I think you're much better off. This is a trader's market right now. Just between, equities, there's so many stocks that have been, amazing to play, super clean to play. So take it as that. Take it as an opportunity to, look at different markets. There are a lot of markets that are trading cleanly, but I think you can really get caught up and caught offside if you're going to try and be the guy or girl who's saying, okay, this is the market top, this is the market bottom. I think if you're looking from a long-term perspective on the stock market, I mean, I think, it's just kind of common sense. If you're not putting some money in the market when we're down, double-digit percentages, off the high, when we're a 30% haircut on the S&P, if you're not getting any money in the market involved at that point from like a long-term, maybe it's your retirement, your account, your 401k or whatever, I think you either need to talk to your financial advisor or yourself and, realize there's a time to average in, there's a time to not. But from a trading perspective, I think, this is a trader's market right now. Enjoy the volatility.
Okay, so I'm assuming by that comment that you think eventually we're going to, well, eventually could be a long time, but that this is just a little correction in the S&Ps, and probably if we get one in Bitcoin to the levels you spoke about, that they provide long entries for new highs of this rally.
That's my kind of overarching assumption. I mean, I can absolutely be wrong, but to me, anytime Bitcoin is, trading near that kind of $6,000 to $7,000 figure over the last 3 years, it's been a pretty good buy outside of the two occasions where it was below 3,000, but it didn't last, or down to 3,000. It didn't last down there very long. I am still of the mindset that Bitcoin is going to new highs. I think what we're experiencing now, though, is, kind of the law of, diminishing returns. I think the peaks, are going to get, this is not a good example here. This chart shows you a little bit more. So you can kind of see on the logarithmic chart, right? You can draw, a curve here, right? Almost. So I do think we are going to continue, we're continuing around up this, this curve. I just do think that the peaks are going to get, the magnitude of each move is going to be less, right? Maybe we're not going to see a 30x this time from the bottom, but even if Bitcoin goes to, 50K, which is only a 2.5x of the previous high, that's still 50K for one. So I do think we're seeing that kind of law of diminishing returns here in terms of, the cycles on Bitcoin. But I do believe that, we're trading near that, kind of curve. This is going to be upside down, but on here.
Like a parabola.
Exactly. And the parabola is it's losing its, it's flattening out. But I mean, for the most part, why would you bet against history? And with the S&P 500, I guess that becomes kind of, a geopolitical question as well. Is the U.S. losing its place as the superpower in the world? Are U.S. assets still where your dollars, the big money is best spent, or is this going to start moving to, a China or something like that? I'm still of the mindset that the U.S. is the place you want to be, and that the dollar is the, kind of gold standard currency. That can obviously change, but I just don't think it's quite ready to yet.
Okay.
I'm leaning on the U.S. surviving.
Okay, good, because I live here.
Yeah.
So that's good news for me. I appreciate that, Maine. So you talk about the gold standard being the dollar. How about gold itself, which is challenging the 2011 highs, about $80 away?
So if you remember when we were here over a year ago, I believe gold was trading way down here, kind of at 1,200, and you and I were both talking about having a bullish year for gold. So I hope you heeded our own advice, because I've definitely been longing gold a lot. So I was watching this kind of area up here to get run, and it finally did. These highs here. To me, this move is getting, kind of long, but overall, I'm expecting one more push higher on gold. A level I like is 1822.
Okay.
Which is essentially
just a marginal new high, take out last week's highs by a few bucks.
Exactly. It's essentially
clean out shorts and diverge.
Exactly. Okay. So, look at the weekly, right? We've got, 1, 2, 3, 4, a fourth green weekly candle in a row. So I wouldn't be surprised if we can just get a little bit higher, come up into these highs here. 1822 is a level I like, and then see some sort of correction. There's a lot of room that this can fall, on the higher time frames. So, you obviously got to be aware of that. But I think after breaking out of this, multi-year kind of range, the expectation that the move that was going to precede it was going to be a large one. So I am leaning, on Team Peter Schiff, you could say, that gold will see, new highs. And I think silver is the laggard. I think if you look at the gold silver ratio, it was completely out of whack for a long time. And generally what happens is you see gold run and then you see silver run. And I think you see the exact same thing that we saw on gold here about to happen on silver. We're in this, very long drawn out range on silver. We had a huge move to the downside here, right, during the coronavirus, thing. And I think, once we're getting over this kind of 21 handle, silver's got a lot of upside. And I think gold will cool off. We'll see gold go a little more sideways, but I have no doubt that we can see, $30 silver once it's able to kind of clear this high. Because to me, there's a lot of room right here. And if we can break out of this range, I'm very bullish on silver.
I forgot what a disciplined, excellent technician you are, Maine. So really some crystallized looks that you've given us. I'm a little bit pressed for time, but I want people to be able to follow you at Trader Main. And if you'd like, you could show your website now and tell our viewers that are watching it live and then watch a recording the best way to get a hold of you and get involved with you.
Yeah, absolutely. So, I mean, the best way to get in touch with, Trader Main would be to just DM me on Twitter.
Okay.
I've been actually taking a little bit of a step back in terms of, putting out a ton of content. I've been taking the summer. I mean, coronavirus for everyone, right, has been, I think, a very weird time. And I've been just kind of spending this time first of all in the markets, because the markets have been great, but just also kind of doing, some reflecting, trying to spend some time with my family, making sure my health, everyone that, I care about's health is in order. So I plan on kind of getting back on the saddle in terms of, posting YouTube videos, things like that on a more consistent basis. So if you want to talk to me, you want to get in touch, best way to do so is through Twitter. If you tag me, I will see it. That's at Trader Main, MAYNE. Or on YouTube, youtube.com/Trader Main. I'll be posting. My goal is to do at least one video a week, some sort of live stream where I'm talking about the markets. I always have a Q&A box going, so you can ask me questions there. Would love to interact with any of you, and I obviously hope I'll be back here one day again soon.
Okay, Main, let me, before I say goodbye, any type of longer term view on COVID-19 and, is it going to be with us forever? What's your outlook for the pandemic?
Sure. So let me start with a disclaimer. Much like my trading, I'm not a financial, a certified financial analyst. I'm not a epidemiologist.
Just an opinion.
Or a doctor. But initially I was very, bearish COVID. I was, the guy who was like, okay, we got to stay inside. We don't know what this is. But it's been, several months now. A lot of the data is coming out, and I do not want to downplay any of the death at all, because any sort of death is horrible. But, when you're looking at the numbers in the US, it's not good. 150,000 people dead, but it's also, I don't think, nearly as bad as we had originally anticipated. Regardless of what the media may tell you, 600,000+ people died from the flu in 2018. So if you're kind of tracking out where we're at with COVID right now, those numbers are kind of similar. What it seems to be is it's much more contagious, and it seems to be deadlier in higher risk people. It sounds to me like this is something that might just be part of our lives. Much like the flu, you can get a flu shot every year because the flu changes, it mutates, and there's a good chance that this can change and mutate. So I think the social distancing, what we did is flatten the curve, make sure we don't overrun the hospitals. But I don't think anyone thought that it was going to make it go away. It more was just kind of delaying the inevitable. I don't personally think this is the second wave. I think this is just the delayed first wave, because everyone was inside. You let people out again, it starts spreading. So I think it's going to be very interesting to see where we are come Christmas time, come the election time, if there's a real second wave. And this thing maybe dies off a little bit over the coming months. But I think we're going to have to return to some version of normalcy. I don't think the death rate is high enough to justify shutting down the economy, shutting down, everything. I think what we need to do is people who are high risk need to be more careful. And I think we need to, hope that there's a vaccine of sorts. But it does sound like this is something we're going to live with and have to learn to deal with.
Okay, well, you're talking about this fall, so later on today, why don't we touch base on Twitter and get you scheduled for October? Should be an interesting fall with the elections here in the U.S. and everything else. And I want to thank you for coming in again and edifying the FACE community, my trading warrior brother, Main.
Thank you, sir. All right, Dale, enjoy the rest of your day. Have a good week, and we'll talk to you soon.
Happy birthday.
Yes, thank you. The big 3-0. I'm getting old.
Oh, yeah. I'll trade with you. All right, buddy.
Talk to you later.
Happy birthday. Trader Main, everybody. We'll see everyone tomorrow.
Thanks, guys.
All right. And remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. Adios.